They have degrees from Wharton, Stanford, and MIT, so. You have a PhD, right?
I do.
Dr. Ibrahim.
I wish everyone would call me.
Okay, so just quick introductions. Maha is a general partner with Canaan Partners. Beth is general partner with FirstMark Capital. Connie Chan is general partner with Andreessen Horowitz. So thank you guys for being here. In the diversity breakfast session this morning, someone in the room said, we're seeing so many venture capital firms hire their first female VC, but are we going to see them hire their second and their third? And research shows that at least for board diversity, the presence of 1 or 2 women doesn't actually bring about a culture shift. 3 is like the magic tipping point. Not that you should cap it at 3, but I'm wondering from your perspective, how do we make sure that this is a step and not the final destination, and that it's not just checking a box, both at your firms, which I know you're not the sole female GP now at your firms, but across the board at other firms?
Yeah, well, I'm happy to say at Andreessen Horowitz we do have 3 general partners who are female.
Is it amazing? Is it this magical transformation?
It feels awesome. It feels awesome when you're at the table. You definitely notice their presence. And as a firm, we are over 50% female. Mm-hmm. So I think it's a great step in a good direction.
So from the standpoint of making sure that this change happens, I think once we have women in, or also as we're thinking about, encouraging other firms to add more female partners, it's about opening the funnel, making sure that we're looking for partners in every place that we can, versus we generally look for people in our sort of closest networks, and many times those happen to be men. So opening that funnel, making sure that we're thinking about considering all candidates.
Yeah. Maha?
So I joined venture a bazillion years ago, almost 2 decades ago. I've been with my firm. And I'd say that the industry has changed dramatically in terms of the receptivity to females, particularly in the last 5 years. And that's been really heartening. There have obviously been a downside to it, which we've all heard in the industry over the last couple of years. But the pressure that's been put on the venture industry to diversify has led to a number of females joining the industry. And our mission at Allraise, and why we started it in the first place, was to make sure that, first of all, those women come into the industry, and second of all, and equally as important, that they stay, and that they become successful, and that they are promoted.
And so, explain Allraise for a minute.
Yes. So it started with 35 general partners across the investing spectrum in tech. And we recognized that mission was to make sure, again, that those women become successful. So there are 35 as a starting point, and now it's probably in the hundreds of women, female VCs, who are banding together to help support, mentor, share deal flow, share LP context, do everything that is within our power to make sure that these females are given every opportunity to become successful, and frankly not left in the corner as a token.
And by the way, just to give a shout out, I think we have a few members of Allraise and women involved with Allraise. Stand up if you're in the room. Mar, Terry, we've got a few in here. Awesome.
Allraise has been just a fantastic resource. I'd say even for me, I feel like mentorship is what a lot of women in investing are always seeking, whether it's from a male or female mentor. And Allraise is just a great community to provide that kind of mentorship. And I love what you said about opening the funnel. I mean, for us at Andreessen Horowitz, this year we made a big change for our general partner criteria. Before, we required that they had been CEOs and founders of companies. And the fact of the matter is a lot of females are these amazing executives who might not be the CEO, but they're the CMO, or they're the head of sales, or maybe they're the CFO or whatnot. And now I think we're really trying to push diversity of thought by opening this funnel.
And you're being modest, but you're basically the reason that Andreessen Horowitz changed this rule, if I'm not mistaken.
Yes.
And just to add on a little bit, because I do want you all to weigh in on this. I mean, this rule was not there, was not put in place to keep women out. This is one of these, it's a blind spot in my view. I know even Ben Horowitz called it an outdated rule. I don't know if it was ever dated. Is that the opposite of it? That's the same thing. Anyways, you know what I'm trying to say. So I'm just curious to know, how do you make sure for firms who do have blind spots, how do you get the GPs, the current GPs, to realize they have blind spots? And also, how do you get them to see that this is not a lowering of standards? This is not lowering the bar. Mm-hmm. Is that an argument still? Is it still a battle just to make that point that it's not lowering the bar?
Yes, I do think that. These firms are small groups to begin with, and they're largely homogenous. They've worked together for a really long time. And so it is very difficult to think about changing the dynamics and adding a different, I'll just say flavor, a different flavor to the mix that might change the way decisions are made, that might change the way conversations are had. Mm-hmm. So I don't necessarily begrudge these firms for not diversifying. I very well understand why they have not. Mm-hmm. Because they felt that is the easiest way to perform, and heretofore they have performed. But I also think that now it's well recognized that there is such an upside and such a benefit for diversity that we frankly don't have to, thankfully, scream it from the rooftops anymore. Mm-hmm.
I think we're also going to see the pressure coming from the top down and from the bottom up. So you have the LP community who's also starting to talk about this issue, as well as founders themselves. So founders themselves, both men and women, who go into these partnerships and say, "Hi, I want to take capital from a diverse group of people. I want a different set of thinking." And so when we see more and more of these founders doing this, we'll see this change accelerate.
And I think it's actually a very logical conclusion. It will produce better returns, mm-hmm. in my mind, for sure. Because as a venture capitalist, we evaluate three things. We look at the market, we look at the team, and we look at the product market fit. And for me in particular, I focus a lot on products. I'm always dissecting the product, trying to figure out what the incentives are for customers. Does it solve a real problem? And there's a lot of startups where the target customer is female. And so for me, I feel like I have a huge advantage in those particular cases where I can really look at product market fit and see something that my colleagues might miss.
Okay. Well, I want to move on just a little bit and talk about some of the other big shifts in your world. And we've seen this rise of mega funds and mega rounds, which sounds really ominous. But there are basically more and more of these startups bringing in rounds that are 100 million or more in some instances. How does that impact the work that you do, the type of startups that are getting funded? I mean, we're seeing record level dollars going in, but what's the impact, the pros and cons on the founders, the innovation, and the diversity of product out there in the mix?
To me, I think the impact's very sector specific. Mm-hmm. So for example, real estate tech is something I'm obsessed with right now, and I know there's some great real estate execs like Claire here today. And that's a category where a lot of times the company needs a lot of funding to get started. Mm-hmm. Same is true for a lot of the fintech companies. So for example, our portfolio company, Open Door, they buy homes and then they resell them. You can't buy that house unless you have capital to begin with. And so now in consumer, you see a lot of companies where that initial business model actually requires a lot of capital. So in those cases, I think it's great.
And in the not so good cases?
I think in other sectors, it's good to have that capital to work with, mm-hmm. and I think it's up to the entrepreneurs to learn how to use it effectively. Mm-hmm. There are some entrepreneurs who don't know how to spend hundreds of millions of dollars, and they may lose some discipline in that process. But I think it's company specific how they use that money.
Okay, any other thoughts?
So the industry has moved to a winner-takes-all market, mm-hmm. right? And I think we all can acknowledge that that's the case, with the probably exception of Uber, Lyft, but for the most part, we are in a winner-takes-all environment. And we have seen a market that over the last 10 years has seen nothing but up and to the right. So when we feel like we have a company like an Instacart in our portfolio, or the RealReal or Turo, that's really opening up a market and owning it and clearly leading in it, it behooves us to do everything we can to make sure that those companies continue to grow and become the de facto leader in the space. That is why these companies are raising capital. The other dynamic that's happening, in particular over the last 6 months or so, is that we're moving a little bit along the spectrum of greed and fear, more to the fear side. So there seems to be an acknowledgement that 2019 will be a year of IPOs, but also potentially will be a year where we start seeing the market temper. And we've already seen volatility in the public markets. And so with that tempering of the market comes a desire on the founder and the board side to hoard as much capital as you can. That is one of the reasons, not the only, but that's one of the reasons that in the last 6 months, and I predict in the first half of next year, we're going to see massive more rounds of capital being raised. We certainly have seen it in our portfolio.
Yeah.
And the only thing I'd add, and I agree with both Connie and Maha, is that as you take capital from, institutions that are writing $100 and $200 million checks, they definitely come with more bells and whistles and more, sort of hooks. And so, for us who are investing in the early stages, we play a big role in coaching our founders around the pluses and minuses for each one of those capital sources.
And I want to ask you also, just sticking to these mega funds, obviously the biggest one is SoftBank. And a significant portion of that money comes from the Saudi Sovereign Wealth Fund. We all saw what happened, the increasing scrutiny on Silicon Valley companies that have taken money from SoftBank on the heels of the murder of journalist Jamal Khashoggi. And I'm wondering, what do you make of the scrutiny? Is it just a passing thing, or do you think that this will be an ongoing trend? And it's not just with sovereign wealth funds, but also on the diversity side, do LPs, is there just going to be more transparency on where's the money coming from and where's it going to?
We certainly saw the beginnings of that when the Patriot Act was enacted after 9/11. So there were a number of funds that had taken in a flavor of Middle Eastern
You like
capital.
that word.
I really do today. It's just an amorphous word. A flavor of Middle Eastern money that the US government was coming down on. So we saw the beginnings of that then, and clearly we're seeing it again. We're also seeing it again with the US government pushing on China with their recent CFIUS acts. I think it's only going to continue. In large part because of security issues, in large part because of political issues as well. We don't see that tempering at all, and I don't think it's a bad thing.
Mm-hmm. Okay. Connie, quick question for you. You're kind of the China expert at Andreessen Horowitz. We're also seeing CEO of Google went to have his field trip to Capitol Hill yesterday, which I'm sure was a lot of fun, and was grilled. And part of what he was grilled on was Google's development of basically a censored search engine for the Chinese market. What's your advice to the startups that you're working with at Andreessen on how to approach the Chinese market and not do something that they shouldn't be doing?
Yeah, I actually think every company on the consumer side in particular should have a China strategy, but that doesn't mean entering the Chinese market. Mm-hmm. To me, having a China strategy means looking at your exact counterpart in China, studying their product inside and out, understanding how their monetization models are different, and then taking the best learnings from that and implementing as you see fit. And I think it's because China, to me, is this huge R&D center where you have all these Chinese companies. They also have their version of Instacart. They also have their version of Facebook. They also have their version of Twitter. But they look actually quite different when you study those products. So I encourage a lot of our companies to get an intern or get an employee who can use those products, teach them screen by screen what they look like, and study the monetization models. I think it's a great place to get more inspiration.
All right, well, we do need to wrap up. I feel like we should really keep talking for another hour, but next time, thank you guys so much.
Yeah, thank you.
I'll see you out there.